If you've ever wondered how the world's greatest investors think, this book might be the closest thing to a blueprint. Today, we're talking about The Intelligent Investor by Benjamin Graham, a book that has shaped the investing philosophy of countless successful investors, including Warren Buffett, who famously called it the best book on investing ever written. First published in 1949, this book isn't about chasing hot stocks, timing the market, or getting rich overnight. Instead, it teaches a disciplined and thoughtful approach to investing that focuses on protecting your money and growing it steadily over time. One of the most memorable ideas in the book is Graham's concept of Mr. Market. He asks us to imagine the stock market as a business partner named Mr. Market who shows up every day offering to buy or sell stocks at different prices. Some days he's optimistic and offers very high prices. Other days he's pessimistic and offers very low prices. The key lesson? You don't have to follow Mr. Market's mood swings. You can simply take advantage of them when they work in your favor. Another important idea Graham introduces is the concept of a margin of safety. This means buying investments at a price significantly lower than what they're actually worth. By doing this, you create a cushion that protects you if things don't go exactly as planned. In other words, instead of trying to predict the future perfectly, you build protection into your investment decisions. Graham also divides investors into two broad categories: the defensive investor and the enterprising investor. The defensive investor prefers a simpler strategy, building a diversified portfolio and holding quality investments for the long term without constantly analyzing the market. The enterprising investor, on the other hand, is willing to spend more time researching companies and looking for undervalued opportunities. What's interesting is that Graham doesn't say one approach is better than the other. Instead, he emphasizes choosing the strategy that matches your personality, time, and level of interest. One of the reasons this book has remained so influential for decades is that it focuses heavily on investor psychology. Markets go up and down, but human emotions, fear, greed, excitement, tend to stay the same. Graham reminds readers that successful investing isn't just about numbers and financial statements. It's about discipline, patience, and avoiding emotional decisions. While some of the specific examples in the book come from an earlier era of the stock market, the principles themselves are timeless. The core message is simple: focus on value, think long-term, and protect yourself from unnecessary risk. For anyone who wants to build a solid foundation in investing, this book remains one of the most respected guides ever written. So if you're interested in learning how legendary investors approach the market, The Intelligent Investor is definitely worth exploring. If you enjoyed this review and want to discover more books that can improve your financial knowledge and mindset, make sure to like the video and subscribe to the channel. And as always, check out the description below where I've included links to the book and other resources you might find helpful. Thanks for watching, and I'll see you in the next video.